Hey everyone, I'm here with Tatiana Tsoir, and she is a CPA for Linza Advisors. She started her firm 12 years ago. Her office is out of New York, but she can remotely work from anywhere. She helped clients pay less taxes legally. We know each other for a while, and I'm glad she can join me today. And I know tax season is coming up in 3 or 4 months from now, but we can talk about, how she could help people save money on taxes. Hello,
Hi, how are you?
I'm good. How about you? Thanks for joining me.
Absolutely, my pleasure. So why don't we just dive into this thing and talk about, now is a good time to really think about tax savings because, and it's not tax time because once the year is over, there's nothing really we can do for you to help you pay less tax. And we always want to make sure that everything we do is all legal, so that if you ever get audited or whatever, you always can be confident that it's you can always be confident that you can defend yourself against audits, against all kinds of things, right? So we don't want you to get in trouble. We want to do things right. We don't want to be quote unquote aggressive. The idea is to get to the same or better result without breaking the law. So that's kind of what I specialize in, and now is a good time to do that because it's the end of the year. But actually, certain strategies actually don't work after the end of November. So some things we could still do in December, but very limited. So the best time for you to do some tax planning is between now and the end of November. So basically between now and Thanksgiving. And, I've been doing this for many years, but the idea is that the best part, I guess, is that you don't have to leave your current accountant to use the service to save money on tax, right? So like we offer something called a second opinion.
Okay.
And that's where we analyze everything and we'll look at your both business and personal scenario. And we kind of give you a list of ideas of strategies that you could implement. And then if you'd like, we can implement that for you for an additional fee. And you will be on your way and you can go back to your accountant. Now, today I would love to share kind of a couple of basic things, very basic, and yet I'm surprised how many people don't actually implement them or don't use them. But before I do that, I wanted to mention that it's kind of important to distinguish because people who work on a W-2 who don't have a side hustle or anything, they typically can't benefit from it because the US tax code, as just like US economy, is geared towards small business. And so freelance, small business, self-employed will always get more benefits. There's actually someone told me today that there is an article out there about tax savings and tax planning. And I didn't read the article yet, but it's something about, it was written by a revenue agent, so like an IRS agent. And it said something like, if you're on a W-2, you're a sucker, you're the sucker. But that's the truth. Unfortunately, it's, it's a little bit of a harsh way to put things, to put things, but it's actually the reality. The reality is that you have to have a business, a real estate investment portfolio, or a side hustle to be able to benefit from some of these strategies, right? So that's why we're kind of talking about that. Does that sound good?
Yeah, sounds good. So if you're a small business person, so this will be perfect for that type of person. So let's just dive in. Like, what are the top 3 things that people could do now to save money on taxes for 2025? Um,
So you would be saving taxes that you would owe for 2024.
right.
Um, and there are a couple of basic things. Number one is that use the IRS safe harbor procedures. And what I mean by that is that the IRS has this rule, safe harbor rule, where if you're on a cash basis, and there's a difference between a cash and accrual. I'm not going to overbore you with this, but most businesses are on a cash basis, meaning you count it as income when you actually receive the money, and you count it as expense when you actually sent the payments out. And
Okay.
so for cash basis taxpayers, you are allowed to, if you're a business, you are allowed to prepay some of the expenses for the next year in December, so that would lower your tax. So you could prepay your business rent, you could prepay, you know, different things, right? It has to be a legit business expense, and whatever. But you could prepay that. So I'll give an example of what's most common, right? People
Yeah.
think about, okay, like in January, you know what, I really should get a new computer, or I really should get a new computer for me and my team, whatever. That's when you start thinking about it, but don't wait too long, because there are different ways of doing things. And I usually, when I talk about these things, when I talk about the things you can do at the end of the year to save money on tax, I talk about not commingling funds. So if you have a business or a side hustle, have a designated bank account and a designated credit card. Now, ideally, both of those would be business type credit card and bank account.
Okay.
And so, but there's a difference. So let's say you want a computer. Let's say you order it on December 15th. That's not the day that you deduct it, because most merchants in the US cannot charge you until the goods are shipped. And so if the goods are shipped, if there's a delay or anything, if the goods are shipped on January 2nd, you can't deduct it for the year. So you have to be proactive with that a little bit. Now, if the goods ship before the end of the year, you're all good. But then also, if you, let's say, I tell my clients not to commingle funds, and they're pretty good at that. So keeping business to business and personal.
Yeah.
However, if you have a business credit card, and you charge that computer and it ships in December, you're all good. You're taking that expense, you're reducing your income, because you would have to get it anyway, right? So if it's something that you would get anyway, just do it. Now, if you have a designated personal card, sometimes newer businesses don't get that business credit card right away. So with the new personal card, if you have a designated personal card, meaning no personal stuff goes on there, but you charge personal as if it were a business card, in order to get a deduction, you actually have to pay off the statement balance. So if you've charged something on a personal card for business, you cannot deduct it in the year unless you've paid off that credit card in the same year before the end of the year. So something to keep in mind. Timing is everything with those things. Receipts, officially, the official law is that you have to keep receipts for everything over $75. However, I've seen in audits, bank and credit card statements suffice. It's not an official law, so officially, I'm supposed to tell you that you should be keeping receipts. The reality is that it's not always necessary. However, in order to properly deduct your home business, like home office expense, keep receipts for your utility payments, mortgage payments, real estate payments, insurance, landscaping, and all of those things. Even if it's a bank statement for the personal, right? Why is it important to keep it? And it should be done right, like every month. You should download your statements, because you never get audited right away for the year that just completed. You would get audited today for 2-3 years ago, and you may have changed banks, you may have closed accounts, and it will be very hard for you to get those statements out. So don't make the mistake of this. Protect yourself before the year is over. Also, about 25 million out of the 31 million businesses in the US at any given point in time, about 25 million of them are single member LLCs or sole proprietorships. It's great, but it's also not great, because with a single member LLC, you will always pay the most amount of tax possible. So if you don't do anything with the single member LLC or partnership, you will absolutely pay the most amount of tax. Does that make sense?
Yes. So how do you get around being a single member LLC or sole proprietorship?
So you are professionals, some professionals, which is interesting to me and bizarre, if you will, say, oh, just be a single member LLC. It's going to be easy because you're going to have one tax return and all of that. I am not a big fan of that. I'm a big fan of having a separate return. First of all, the audit rate is 10 times less for a separate tax return for the business, but also you get new benefits, you get a deduction, you get a couple of other things that you typically wouldn't be eligible for a normal business. And so for single mom LLCs, there are ways to convert it to a different entity. Maybe it's a C Corp, maybe it's an S Corp, maybe it's a partnership, depending on the setup. So typically when you ask an accountant, what should I be? They will tell you, oh, just file for an LLC. And typically,
So depending on how much you make though, right?
well, yes, but typically it's an answer. The answer is one thing. When somebody comes to me, I always look at, okay, tell me more. I want to figure out how many entities can we get into the mix to squeeze the most amount of tax. So maybe it's a combination of a C Corp, a partnership, and an S Corp, and an LLC. Maybe it's a C Corp and a partnership. Maybe it's a partnership and a single member LLC. Whatever that combination is, I always look at it from a tax perspective, but more than just one entity. Because, for example, designers, right? Designers, interior designers, they usually also sell furniture and make money on it. Now, if they lump it all in one business, they will actually lose the qualified business income deduction, which is very lucrative. It's 20% off your net profit. But if it's split into two separate businesses, one will lose it and one won't. So that's why, if they have kids, we'll put kids on payroll if they're a certain age. That would be another entity in the mix, because there has to be a business purpose for it, because you can't just set entities up for only saving tax money. So things like that, they have to just be in the mix, and you have to be thinking about them. So single member LLC, the rule of thumb is if you make 50 to 75,000 net profit for the year, talk to somebody who can help you convert it before the year is over. Typically, I don't do those conversions after December 1st.
Okay. So what do you recommend? Most of the time, I deal with realtors and mortgage and those type of businesses. They're on a commission, 100% commission income, and they have really high, using about 20% of their gross income on advertising.
I laugh because I don't believe in those things. I don't believe that, marketing agencies will tell you that for sure. I've seen that happen. I've seen 30%, and I've seen people go out of business because of that.
Right.
Unfortunately, fortunately, there are ways to grow your revenue without advertising at all. You just have to be very clear as to how you're different from everyone else, what it is that you solve for someone else. You're a real estate professional, right? You're not just selling and buying houses with people. You're helping someone find their home, maybe their forever home. And that influences their entire life. Do you know how life-changing that is? To finding the right place, the right price, the right mortgage payment, something that's affordable, something that makes sense for the family, right?
Right.
So it's much more than that. That's how you're different. Not all real estate agents do that. For many, it's just transactional stuff. Oh, how much can I get here? How much can I get there? And stuff like that. And so that's why it's important to think about these things. And there are things like upsells, downsells, cross sells, standard operating procedures and systems. And probably I work with about 40 different strategies to help people grow their revenue without advertising at all. I don't believe in using a percentage of revenue to spend on advertising, and advertisers will hate me for it, but honestly, I don't really care, because the reality is that, and the reason I don't believe in it, at any given point in time, only about 1 to 3% of people are in the market for what you're selling. which means that 97% of the time you're wasting money on advertising. You're showing your ad to people who don't care, who don't need it right now.
Maybe I meant marketing. Marketing. You can do marketing.
Same thing.
That will be more like you're just letting the people what you do, you know, through social or print or social, electronic or paper.
I think less marketing, more building real lifelong relationships with people. That's the key.
That's the key. Yeah.
So getting to know more people, putting your intent into those relationships doesn't mean expensive gifts. It doesn't mean anything really. It means showing up to that moment. Even if you and I connect for 30 minutes, I'm there fully.
Mm-hmm.
I'm there to listen and see who you are, what you do, what you stand for, and how can I help you, whether introducing connections or whatever that may be, right? I'm not in the business of tax savings. I'm in the business of building lifelong relationships with people because that's what it's all about.
That's good advice. I like that. Are there anything else you can add for people that want to know, what can I do between now and the end of the year? I just reach out to you.
Well,
I know it's a very long answer.
So a couple of quick things, it's a safe harbor that I've mentioned. The prepaying of things is great, but then also you can, by law, legally, absolutely stop billing clients. So let's say you don't send an invoice until December 31st and they pay it on January 2nd. That's it. You've moved your income effectively from one year to another. And stuff like that. If you're able to wait for that income, defer it to the next year, and then you'll deal with the next year. Because business is always unpredictable. If you need to buy something, but make sure that it's charged before the end of the year. Looking to do cleanups, donate some stuff, get a receipt, and claim it on your taxes. And if you're looking to renovate a home office or an office or whatever and put in some improvements, absolutely do that before the end of the year. This way you can deduct it and again reduce your income on something that you've already spent.
All right. Well, that's really good advice. So anyone out there that have any questions or concern, second opinion, how do they reach out to you?
So the second opinion details are actually on my Instagram. So if you want, you can find a coupon right on my Instagram post. And there's link to schedule and everything else. I am asking for a lot of information there so that you can, I can come to the meeting with you and be prepared to talk about specific strategies, and instead of asking you how many kids you have or what you're looking to do and things like that. So it's very targeted and helpful in the moment to you. And so that's kind of what that is. So I think the fastest way to find it is on Instagram, and it's my first name and last name.
So one word, first name, last name
on there.
On Instagram.
Tatiana.
Okay.
So yep.
Tatiana
Tatiana, Tatiana. My last name is Tsoir. Yeah.
Okay. And fill out that it's kind of like a survey asking, fill it in, and more detailed the better, and then that way you could discuss with them their specific what they're looking for to do. All right, this has been great. I appreciate
absolutely.
you.
It's a question. Yeah.
Appreciate you being here with me, and let's stay in touch. Thank you.